Have you ever suspected that the global tax system is, well, kind of secretly rigged? Welcome to this explainer, where we're going to take a truly comprehensive look at a massive, hidden flaw in how governments actually collect their money. We're diving straight into some groundbreaking World Bank research today that uncovers a totally fascinating paradox right at the heart of our tax systems. It's a story wrapped up in economic math, behavioral psychology, and honestly, that fundamental fiscal contract between all of us and the state. To get there, we'll be following this quick roadmap. 1. The fairness paradox. 2. Salaried versus self-employed. 3. The ultimate policy trade-off. 4. The citizen survey experiment. And finally, 5. The enforcement solution. But hey, before we dig into the hard data, I want you to just ponder a quick, provocative question. If you and your neighbor make the exact same income, should you pay the exact same amount in taxes? Intuitively, almost all of us scream absolutely yes, right? It feels like the absolute baseline for a fair society. But as we're going to see, reality makes that incredibly difficult to actually pull off.
Section 1. The fairness paradox. Whenever we debate taxes, we're usually arguing about vertical equity. The whole idea that the rich should pay a higher chunk of their income than the poor. But what we're zeroing in on today is horizontal inequity. This happens when individuals with the exact same income somehow end up with entirely different tax burdens. It's the ultimate metric of whether equals are actually treated equally. And spoiler alert, right now, across huge parts of the globe, they absolutely are not.
And listen, this isn't just some dry academic theory. Look at this quote from the Indian finance minister back in 2018. It perfectly highlights a massive political headache. When the salaried class feels totally squeezed, while the self-employed kind of just slip through the cracks, people lose faith in the whole system. The very legitimacy of the tax code is on the line when the rules don't apply to everyone evenly.
Which brings us to Section 2, salaried versus self-employed.
So the core issue here is that taxing closely held income, like what a self-employed business owner makes, is structurally a total nightmare. It's really not about preferential laws. It all comes down to enforcement. For salaried employees, your income is automatically reported by your boss, meaning evasion typically sits below 10%. But the self-employed, they rely on self-reporting. And the World Bank found that their evasion rate sits anywhere from 50 to 70%. That is a staggering gap, folks.
Now, take a look at this massive 44% figure. When I say self-employed, you might instantly picture struggling, informal street vendors. But get this, in developing countries, almost half of the richest citizens are actually self-employed. Compare that to high-income countries, where it's closer to 10%. It means that in the developing world, a huge chunk of the absolute wealthiest people have incomes that are structurally super easy to hide.
When you run the microsimulation models across 25 developing countries, the World Bank data reveals just how badly this skews the whole system. At the very top, a wealthy self-employed worker pays 36% less in taxes than a salaried employee with the exact same income. 36%. This horizontal gap between workers of the exact same wealth is practically as massive as the vertical gap between the rich and the middle class.
Section 3. The ultimate policy trade-off.
So, if the math is that obvious, why don't governments just fix it? Well, imagine a government decides to tax the rich more, so they bump up the personal income tax rate. Sounds awesome for vertical equity, right? But here is the catch. The wealthy self-employed can largely still evade this, so that new higher rate really only punishes wealthy salaried employees. You improve vertical equity, sure, but you drastically worsen horizontal equity. It's this vicious seesaw trap where fixing one type of fairness actively breaks the other.
Now, the World Bank data points out a really fascinating trend when it comes to consumption. As it turns out, wealthy employees and wealthy self-employed folks actually spend their money in remarkably similar ways. They buy similar goods and they shop in roughly the same proportions across both the formal and informal sectors.
And that similarity in spending reveals what looks like a silver bullet for economists. The effective consumption tax, think value-added tax or VAT, differences between these two wealthy groups is practically zero. So logically, shifting the tax burden away from income taxes and over to consumption taxes would treat them both with perfect horizontal equity. A VAT completely levels the playing field.
Section 4. The citizen survey experiment.
But hey, human beings aren't just logical economic models living on a spreadsheet. To make this explainer truly comprehensive, we need to look at real people. Researchers actually wanted to know how everyday citizens feel about this. So they surveyed 2,600 middle and upper-class workers in Lahore, Pakistan. They gave them a highly relatable baseline. Picture a salaried employee and a self-employed shop owner, both making exactly 100,000 rupees a month.
Going into it, citizens already kind of suspected the self-employed were dodging taxes, but then the researchers dropped the administrative data on them. At this specific income level, the salaried employee actually pays 4 times more in income tax. 4 times! Confronted with that hard-cold data, the respondents' anger and concern over the unfairness absolutely spiked. They were not happy.
And here is the incredible disconnect the researchers uncovered. People were absolutely furious about the inequity, and the vast majority deemed the whole system totally unjustified. Yet when asked about policy preferences, there was zero increase in support for shifting to consumption taxes. None. They entirely rejected the mathematically sound solution that would actually level the playing field.
Now, you might be thinking this is just a local phenomenon, but it's really not. The researchers validated this with a huge online survey of over 15,000 people across 5 other nations: Colombia, India, Indonesia, Nigeria, and the Philippines. And guess what? They perfectly replicated this exact same behavioral paradox everywhere. Citizens are universally outraged by the horizontal inequity, but they flatly reject consumption taxes as the fix.
Section 5. The enforcement solution.
So why the stubborn refusal to embrace a tax that actually fixes the gap? Well, the data shows that citizens are experiencing what we might call an illusion of choice. They refuse the consumption tax trade-off because, let's face it, it's regressive and it hurts the poor. But more importantly, they largely believe the government already has the capacity to stop self-employed evasion. They don't want new tax laws or a shift to a VAT. They simply want the state to step up, do its actual job, enforce the laws already on the books, and collect the taxes that are owed.
Which brings us to the end of our explainer. I want to leave you with this final thought to chew on. Tweaking tax policy alone is a bit of a trap that just sacrifices one kind of fairness for another. As governments globally struggle with rising inequality and desperate needs for revenue, will they just keep playing with the seesaw of tax rates? Or will they finally build the digital and administrative enforcement capacity needed to truly restore the fiscal contract? It's definitely something to think about the next time you glance at your own pay stub. Thanks so much for learning with me today.